Hi guys, everyone. In this video, I will tell you how I closed my yesterday's trades, by what logic I went in, why I started shorting it, and I will tell you how I started working out a new strategy on Bybit according to the same logic as MEXC, and also tell you what logic I follow when I trade such coins as, for example, red, that is, coins that have just been flipped. At the moment, my deposit is already $600. Let me remind you that from last week I started with $100, finished last week with about 4x's, going from $100 to 400. This week I have less active, so I managed to make only plus $200, but at the same time, it's plus 50% of the deposit that was at the end of last week, and it's 6x's from the initial deposit, that is, I made $600 from $100. I would like to start the analysis with a coin den. This coin we have recently got stuck. I worked it out very carefully, with understated risk management. I took away a very small movement, because if you pay attention to the senior time frame. Then we had a coin on the 26th of February, and from about the 4th of March, it began to grow very actively. And it began to grow recoilless, that is, there are no strong corrections observed. Therefore, when entering this coin, I decided that I would enter it very carefully, with understated risk management. I came in after the signal from our indicator on the pump. I came in late, but at the same time I managed to pick up a little movement, if I'm not mistaken, about 1%. Even more than 2%, I took the movement according to the schedule, or 117 panels. The next deal on the coin is pain. Here I already have a bigger profit. I also entered using our indicator. Now I will find the entrance. Here is about where the indicator sent a pump. I went into a coin and closed at the first candle. I did not wait for a strong rollback, as I saw that the coin could become sharply sideways, and decided for myself that I would take the first move better and exit the deal. I managed to take 1% on schedule, or $3 to the deposit. The next deal we have is a hash coin. I also entered it using the indicator. Here, about somewhere here, he sent indicators, a signal that the coin was stuck. I immediately go into the coin. Having seen with my eyes that we have broken through this level, I enter into the deal. I take profit immediately on the first movements. I immediately fix it. I take somewhere about 1% of the movement according to the schedule. With the 20th shoulder, this is about plus 20% of the NEL. The next coin we had was wax. The coin we recently got stuck, and now I'm just going to tell you about how I work with such coins. First of all, I also fumbled it, like many guys from the listing itself, closed it here in a small profit. Now you will see the left NLCA here, and after that I let go of the coin, and began to wait for a strong movement to begin. Here I saw that the coin broke through this level. I began to enter a very understated risk management. Why? Because the coin has just climbed in, and, in general, it still has no history from above. So there is no understanding where to average it, so I decide if I'm going to short it, then draw it with low risk management, in order to sit it out. Then I did the second averaging, also with understated risk management, that is, I had about 0 to 5% of the transaction deposits, despite the fact that I usually trade 1 to 2% of the deposit. But let me remind you that if you have recently come to us, then the first criteria, when you enter into a transaction, you should have more than 2.5 million revolutions per day. And risk management should not exceed 0.5% of the transaction. That is, the first move is best to do 0.1% of the deposit. And I started hatching a deal already. The entry point I had was about somewhere here. The coin started to pump a lot. At the moment it was even minus about $1,000, but I sat it out and closed it, as you can see, in plus $3. I probably came out somewhere around plus 1 plus 2%, according to the schedule, with the 50th shoulder. This is 50 dashes, 100% of the DLA. And after I closed here, the coin began to grow strongly again. Then I also carefully shortened it here. I was shorting not according to the indicator, but on my own initiative, because I saw that the coin was moving very much. So here I went into breaking the level, went a little higher somewhere around here, the coin immediately rolled in a little. Immediately closed, waited again with a new growth, here it opened again somewhere here. The coin immediately went for a small correction of 1 or 2%. I immediately closed it. Again, the coin fell, it began to grow right away. A short opened somewhere around here, closed it somewhere here, that is. Very carefully scalped it. But at the same time, I also underestimated my risk management. And just here are the last 3 trades on the chart that I just showed you, here they are. That is, I went a little lower here with risk management, because I understood that if the coin flies higher, then I need to close 100%, because it can start repeated rallies, after that only go for a correction. But when this rally ends it is unclear since, but on the chart we have there is no history, and it is unclear where it becomes. It was only through the glass information that it was possible to find out. Next, let's talk about the Bybit exchange, about how I am developing a new scalping strategy here using our indicator. Namely the same pump and dump indicator, only on Bybit. What is the advantage of trading on Bybit? Firstly, there is more liquidity, that is, you can enter large amounts, and you can close the market. Since in most coins the glass will not be as empty as on the MEXC, that is, there will not be such a strong slippage. Also, the exchange itself provides more liquidity on coins. Let's move on to how it was possible to work out the pump indicator on this coin. Here the analysis is a little different in contrast to the MEXC. First of all, there is definitely a need to wait for a resistance zone. Now I'm going to show you for 15 minutes on that frame why this is a resistance zone. As you can see here, at the first tampon, the coin appeared on resistance here, that is, it met with a large seller. Then it broke through, collected, most likely, liquidity here, then the zone turned out to be resistance again, then it turned out to be resistance again, and as now on the minute frame, you will see that it was initially also resistance. But it was then pierced. In other words, the indicator sent us a signal that the coin is being pumped. We have a lot of time to analyze the chart, because as you can see, the coin has been growing for a very long time before this resistance. About 28% and 44 minutes, that is, it is quite enough to carefully monitor it. Place some notifications about the approach of the price to the resistance zone, and here it is already possible. It was necessary to consider the first ball. In other words, it was possible to put a limit order in short at the price of 0.2172. You would be taken into short, and immediately on the first move, you could take firm 1% on the schedule. Or at the peak 3% of the movement on the schedule. With the 10th key, it's 10 dashes of 30%. Why is it worth closing here immediately at the first movement? Because of the coins. First of all, the coin had news that it was listed on such an exchange as Coins, one of the largest exchanges, where it is very large, where there is a lot of liquidity. Therefore, if I continue to have such situations, for example with another coin that has flooded for some reason, I advise you to work it out about the same way. You found a resistance zone, placed a limit order on the lower border, and on the first move, you take it and then follow the coin. When is it worth shorting a coin for the second time, that is, after it has broken through this resistance zone? First of all, it should be shortened after you see something like this sidewall. This suggests that interest in the coin has fallen, and with a high degree of probability, it will begin to fall. If we analyze the chart a bit, we will see here 2 levels that were subsequently broken through. In other words, we have the first level here, the second level here. And as you can see, when the price broke through the first level, it flew very low, and at the moment, it was possible to take 3%. But when to go into the short here? First of all, you need to wait for an approximate picture like on this coin. That is, you need to wait for the coin to start some kind of strong correction after growth. You should see on the lower time frame that there was such a very strong growth of 10%, about 5 to 10%, and that it was subsequently blocked by another 7%, and it's not worth going in yet. You need to continue to monitor the price, and the first good entry point will be above this local all-time high up. If we went in here and it would take us, for example, at least here, and at the moment, we could immediately take 4% according to the schedule. Then it was possible to set the limit again, according to this alt kaima, again in our village. In the transaction it was possible to pick up 5 or 6% of the movement according to the schedule again at the peak. Then, how could it be worked out again, and go into the short? because it is logical that the coin will go into correction after such a strong growth. So, for the third or fourth time, it is worth considering not the entrance, not near this high, but somewhere closer to these candles. About 1 to 2% of this high could be considered an entry point. That's just the same here. From this local high, it was possible to place a limit order of a little percent, 1.5%. But at the same time, you need to understand that such a thing can happen, that the coin will still go on to be. Therefore, it is necessary to underestimate risk management. Firstly, because you have repeatedly taken profit from this coin and are already in a good plus. So it's worth working with this coin more carefully. Then you go in, for example, there are shorts here again, and start pulling it. For the third or fourth time, you can already consider a coin for a more global correction. That is, you analyze the chart, look. Remember that we have such a resistance zone that may turn out to be a strong support, that in the future. It seemed to me that it was here, that is, very much repeatedly. And then it broke through the lower border altogether and went into a strong correction. But at the same time you will need to set a stop. Where to put a stop here? It is better to put the stop above the high of the last local, that is, at 0024.83. There will be a very good stop here, that is, you go somewhere just below a percentage of 2 from the last local high. And put a stop of 1 or 2%, and put a stop of about 2 or 3%, that is, if you went somewhere here. Let's say not everyone gets to go perfectly, so I'll take somewhere here, then you would get a stop of 3%. At the same time, global goals. At the same time you enter into this deal with global goals, so we entered somewhere here. And pull from 9%. And globally, we can pull from 7% to 9 to 10%. In other words, the risk will be about 1 in 3, 1 in 4, which is very good. In general, it was possible to put the first tack here, close 50% of the position in this zone, and set the table without loss. That is, you will already have a stop at the entry point. That is, you have fixed 50% of the profit, keep the coin on. I remind you that our entry point is somewhere around here, and then you pull a coin, put a take approximately where we have a trade. Or after some movement, when the zone breaks through the lower resistance zone. Or consider fixing after the coin breaks through this lower limit of the resistance zone, which turned out to be support after the growth. The coin stays in the support zone. We see that the coin fell for about a couple of minutes, about 5 minutes, that is. You can wait for about 5 to 10 minutes after breaking through, watch the coin. You watch the coin for 5 to 10 minutes, and you can fix, for example, 25% of the position. And move the stop somewhere closer, for example, to the lower border of the resistance zone. Because this zone will already become resistance, because it had support before, and has already broken through the lower border. Has gone much lower, therefore, this zone can already be considered as resistance again. And when it's time to fix the last part of the position, it's up to you to decide, or wait for the coin to fall to the end, that is. It will block the entire growth, and as a result, you take more than probably 50% according to the schedule. Because the coin was growing at its peak. Well, yes, about 50%, 45 to 50%, globally as a whole, you can take away. Results? You could have taken the first short, only on the first movements, because we have a coin on strong news. Because when a coin is flipped on coins, it is very strong news, and also when it is flipped on Binance. It is also very strong news. Wait for the coin to start fading, wait for it to start showing some growth, while putting the limit in the short above the hake, which it left after the correction, put the limit, take the first movement, again consider some short. Approximately put the limit here again, take the movement again, you already understand. You understand that on the third or fourth time, the coin may not reach this high, so put the limit a little lower, put the limit. Put a good stop, and take away 7 dashes of 10% at the first deck. I remind you that we will have this entrance somewhere around here. You choose just the same, let's say 8%, while we have 3% stops, that is, the risk of scree is more than 1 to 2. Even closer to 1 to 3, and fix 50% here, put the table at no loss, and then keep the coin calm. You have already taken a decent profit, closed it here in short several times, and then watch the coin. And the second tech, which can be considered either the second fixation of a 25% position, or finally 50% of the position. This is when the coin breaks through this support zone, the lower border, and gives a strong correction. Here you can, for example, fix 25%, 25%, put, once again, a stop on the lower limit of resistance, and, for example, pull a coin again in the hope that it will block the entire growth. At the same time, if the coin closes on the stop, then it will close in your plus, that is, the last 25% will close in your plus. Such coins are often found, especially when they are listed on the Coinbase, on the Binance. And at the same time it is already on the Bybit. You can safely analyze it, you have time for this. You enter the first short from the resistance zone, take it locally, then work with the coin after it is already on the fade. Then for the second and third or fourth time, you can already consider it for a global short. At the same time, you should have clear goals, that is, there should be at least 1 to 2. That is, 2 profitable trades you have overlap one of your stop loss. And finally, let's talk about coin P, that is, about how I work with coins that have just been flipped. I didn't trade this coin because I didn't have time. So, come on, we just got a coin stuck. You can take the first local short. In general, if it turned out to go somewhere here, it was possible to take 5% according to the schedule, which is very good. Then you should watch the coin very carefully and underestimate your risk management, because what will happen next with the coin is unknown. At the same time, we have other indicators that send notifications that the coin is listed on other exchanges, if I'm not mistaken. It was listed on the Bybit exchange, that is, you should understand that it can have a lot of liquidity in it. That its turnover can easily reach up to 100 million, that a lot, especially after the coin was flipped. Why was there a correction here? One of the reasons why the coin was falling so much was due to the fact that the listing of futures on the Binance was brought, which turned out to be a strong negative for the coin. But after the coin got stuck somewhere around here, it got a growth. After the coin got stuck, it received new liquidity. You can see it here, it has grown by 20%. How would I act here? I would consider the entry of the transaction above the listing, but at the same time, I would put it somewhere above the last high. Because if it holds a high, then with a high probability it will go higher, since there is a lot of liquidity in it. Since it is on the Binance Since it is on the Bybit Binance, accordingly, there is a lot of liquidity, so it can grow high. That is, you need to work as carefully as possible with this coin after the leaf. I also advise you to trade carefully from the listing, because there are coins that give very strong candles from the listing. And 50% up, that is, there are a lot of coins that leave such candles up, and that's right. At the same time the candle is the same down. Therefore, you need to be very careful with such coins, reducing the risk of management here. Then you just sit carefully, watch the coin, try to pick up some local shorts. I always take some local shorts, I don't consider global shorts, because there are such projects that start to swing. For example, the Pi coin, despite the fact that it fell, it began to swing at the moment. If I'm not mistaken, it is also on the Binance, on Bybit. They started pumping it, money started pouring in, they started pumping it. And as we told you at the webinars that at the beginning the coin is always being pumped, or there is a very aggressive marketing that pours a lot of money, that is, squeezes the maximum out of the coin. The market maker takes the maximum money from the listing. The maximum is taken by the developers and its participants who are involved in this project, and then the coin is soon forgotten. But there are also coins like Star 10. The coin from the listing does not stop falling, it rises constantly. Our guys pick it up every day, they come in from the listing. You can also see here that I have been fumbling around a lot, taking some movements, and our indicators always send a signal that the coins are being pumped. As far as I know, our guys took shorts from these pumps, here, that is, there are a lot of them. If you go to our P&L section, you will see that many people still share this star 10 coin, even though it has passed. Even though 3 days have passed. How does this coin differ from the red coin? Well, let's start with the fact that the star 10 coin is more of a meme coin and red is more of a fundamental coin, that is, there is something behind it and it is not a meme coin. It would be dangerous to short it if the creator of this coin would actively push it. And as far as you know, the creator of this coin is a very famous football player, and if he were to send it on his Twitter, then there would be a strong pump accordingly. But since he does not so his coin, in fact he is hers. In fact, it has been listed on the stock exchange, no one is engaged in it and, accordingly, it is constantly falling. That is, it has already fallen by 92% from the listing, and the guys very often discount the P&L on this coin. For 500, 1000%, now you will see on the screen. That is, before shorting a coin, you need to analyze it. If the coin has some kind of fundamental, if you understand that the project will be engaged in marketing, that is, attract some people, you should have an understanding that the coin will swing, new liquidity will appear in it, and it will grow accordingly. Therefore, it is worth paying attention to it after it shows a strong rally. When to consider the fundamental coin after the rally? It should be considered when the project somehow starts. When a project begins to engage in marketing less actively, push its own less, conduct social networks less actively. And on the stock exchange, you will notice that its turnover has dropped significantly, and according to the schedule, you may notice that it will become more sluggish. Therefore, it is worth drawing such coins only after he begins to forget about the coin. They forgot about the coin, it starts to roll away. Here's an example of star 10. They didn't bother with her at all, she immediately rolled away 0. Therefore, if, for example, the team stops dealing with the DX coin when it has low revs, 31 million is very high. I advise you to consider coins up to 10 million. If you want to enter coins with a turnover of more than 10 million, then I advise risk management to underestimate. Because a coin can be pumped, and if there is a lot of liquidity in coins, then most likely it can be present on other major exchanges. I hope I explained in great detail in this video how I worked out my last trades, how it is possible to work out pumps according to our new indicator from Bybit. If you want to get there, then write about the line. I will leave the link in the comments. And told you in detail about how I work with coins after listing. That is, there I also underestimate the risk of management, because the coin has just been flipped, you need to act carefully with it. Due to the fact that the coin has just been flipped, you can see strong pumps and dumps. So you can have a deal as in plus 1,000 at the moment and minus 1,000 at the moment. But of course I advise you to take some first profit, the first local movements, as a rule they are very strong, that is, you can easily take away from 200% of the panel there. Our guys, as a rule, take from 500% of the panel from the listings, that is, x5 to the margin. And many take more than 1,000, 1,300, and 1,500% of the panel. That is, it's 10x's to the margin, 13x's, 15x's to the march. If anyone has any questions, write in the comments, I will answer everyone. Bye, everyone.